with you once again on the India development debate for a direct conversation with none other than the man who weathered the Asian crisis storm. He took the markets by surprise when he raised interest rates by not one, not two, but 200 basis points, 2%. Yes, joining us on the show this evening, Dr. Bimal Jalan, and it's a timely conversation, given how every time the rupee falls, we sigh a little. Thank you very much, Dr. Jalan, for being with us. And before I get to talk to you about the CAD and the rupee and all of that, are there fresh fault lines emerging in the Indian macroeconomy that worry you at this stage?
I don't see that we have macroeconomic, what you might call negative dimensions, which can bring about the kind of crisis that some other countries have faced, even with oil prices. We are managing the oil prices also. We are, this is being, we are managing our prices of oil in terms of what we are charging, what the taxation is happening, and so we are managing that problem also. So I may be sounding very optimistic about our policies and macroeconomy, but what I am saying essentially is that we are responsive, it is a accountable system, and we can manage the various variables that you have talked about, which was not the case, for example, in the 90s, when we had balance of payments crisis of a very fundamental nature or a very strong type, and we were dependent on aid from abroad.
Okay. Dr. Jalan, current account deficit has increased from 1.9 to 2.4% of the GDP over just a quarter period, from Q4 of last fiscal to Q1 of this fiscal. Are you worried about that, and how concerning is it really?
No, of that you are right. I mean, that part is right, that if the current account deficit increases beyond a point where we can't finance the deficit, then there is a problem, And that point is correct, that we have to do something to make sure that exports, for example, increase, and imports don't increase to the same extent, or the trade deficits don't increase significantly. But if you have a trade deficit of the kind that we have now, we have sufficient resources to handle it. In terms of policy, what we want to make sure is that the effective exchange rate, for example, is competitive, and that the export markets are such that we can export and try and reduce our own trade deficit. And I'm sure that we won't go beyond what you might say a safe level, even where trade deficit is concerned.
Dr. Jalan, I know you believe that the rupee should be making its own level in the market, and it's a function of how the market's treated. But given the volatile fall that we've seen in our own currency and the emerging market contagion, does one make peace with the fact that this is the new range of our rupee?
No, the two issues are not related. One about the emerging market crisis and contagion not affecting India. That may affect, But the second part, which is that can we handle the rupee depreciation? Yes, we can. And it's up to the RBI to make sure that it doesn't cause anxiety, it doesn't cause what you might say a certain amount of unreasonable expectation that rupee would decline further than what it is expected to in terms of various other measures, right? Effective exchange rate or real effective exchange rate, or what's happening in the rest of the world and so on. But we can manage because our reserves are high. So I am, what I am saying essentially is that I am quite, at the moment, I think we are in a state where we can handle any of the pressures that we are encountering. And you are absolutely right in terms of exchange rate, because that causes anxiety in the markets. And if there is anxiety, then people will start buying dollars to a point where our reserves would decline substantially, and that we don't want to happen. Do you see what I mean? I mean is that there has to be, and we have handled the East Asian crisis, for example, you might remember, of the old times, but we managed it. And the management was essentially that in terms of exchange rate, you have to be very, very careful to make sure that there is no speculative pressure on the exchange rate of a kind that can't be handled through the policy framework.
But Dr. Jalan, you mentioned the Asian crisis, and as someone who handled that, you talk about killing speculation. The government, we're given to understand, told the RBI to act more proactively, boost efforts to defend the rupee. What must the RBI do right now to defend the currency, other than just throwing forex behind it?
You see, the most important role of the central bank is that if the market is behaving in a way that we think is speculative, that it is not the real need for foreign exchange that people are buying, but people are buying foreign exchange because they expect rupee to depreciate, and therefore they will make more rupees later on. So what I am saying essentially is that these two are different issues, and that RBI's role would be to, if there is a speculation, that rupee would decline and they would benefit if for no reason like imports or no concrete reason for investments and so on and so forth, then we should surprise them. The RBI should surprise them by intervening at a point when it is not expected to intervene.
But yes, okay, so the RBI should do stuff unexpectedly, not actually demolish positions that are building up even in the future currency markets and future currency havens. But is it time that the government comes up with a definite one-time strategy which will restore sanity for the rupee and which will also help rein CAD like it was done in 2013, an 80-20 sort of a scheme, and FC and RB and things like that?
No, I won't concentrate only on current account deficit, but I agree with your point about the exchange rate, that now the time has come where the market expectations have to be reversed, that rupee will not depreciate unless there is the government or RBI want it to be what you might say effectively competitive. So we have arrived at that point where you should reverse the expectations of any depreciation in the rupee. Current account deficit per se has to be handled over the medium term.
Okay, so it has to be handled over the medium term and not knee-jerk reactions. But if you look at how trade deficit ballooned from $112 billion to $167 billion between fiscal year 17 and 18, did we also allow the rupee to appreciate way too much? And is that perhaps why the correction is now hurting us all the more?
No, but we didn't allow, I mean, rupee appreciation was not the problem so far as the current account deficit is concerned. It's the oil prices. It is the fact that our exports didn't have the same kind of incentives as we needed to provide. You know, in a world where there was emerging markets, there were a lot of emerging market competition and so on in exports, and our export structure is different globally than is the case in, say, China. So, but what I am trying to get to you is that we have the resources at the moment to handle that current account deficit issue also and its impact on exchange rates, as well as make sure that our growth rate is not affected adversely because of these developments.
But Dr. Jalan, how will all of these developments really shape and determine the monetary policy trajectory and the RBI's own stance?
No, the stance and trajectory is to give confidence to the market that we have what it takes to handle the kind of issues that have emerged lately, including the current account deficit. So the stance is giving confidence to the market, giving confidence to the rest of the world, giving confidence to our producers and investors that this we can handle.
Okay, so it's not just going to be about rates, but it's also going to be about what sort of confidence do you emanate, and I think RBI needs to talk a little more there. But Dr. Jalan, are we finally nearing the end of the NPA resolution process? I mean, there's so much that's being said about banking and everybody worth their salt is making statements, but are we finally nearing the end of what could be the NPA resolution process finally?
I have no doubt that the measures that are being taken by the RBI and the government, that they would ensure that NPAs don't go beyond the point that it had gone earlier, and that we would gradually reduce it. I am talking about the word gradual, because if you take a very strong action just now, then that would have a greater pressure on our economic growth prospects as well as interest rate prospects than what we need from the growth point of view. But we can handle it. I think that the NPAs were high. We could have handled it a little earlier than we did, but now we have the main instruments with which NPAs can be reduced, and the government is already taking steps. Like the bankruptcy and insolvency law is a very positive law from that point of view.
Okay, a final question before we let you go. Elections are approaching. We are less than a year away from general elections now. Will the government give in to populism? Will it succeed in keeping a firm focus on macroeconomy? These are questions that are already haunting the minds of investors and you know, stakeholders alike.
Well, I should not comment on that part. I mean, that's for the government to decide. I mean, elections are elections. So, you know, I mean, but they have to take, in the sense that the economy also makes a lot of difference to the trust in the government. So the management of the economy is just as important as management of the electoral population in terms of subsidies, etc. So I'm sure that action will be taken to make sure that our economy does well.
Thank you very, very much, Dr. Jalan. On that note, completely out of time here, but thanks always
Thank you
for joining us on ET Now with your perspective. And who better than you to get a quick commentary on as far as the Indian rupee and its movement is concerned. Completely timed out on this edition of the India Development Debate and the direct conversation we had this evening. It's over to Tanya for Top 10 at 10.